Hello everyone, welcome to the 53rd episode of me learning how to trade in Forex. So in the last episode we went through what is the Forex broker's order execution quality. We read through all this page and made some notes regarding slippage and all that. Why was this one? Are you suspicious about why order wasn't executed? Requested price? Yeah, slippage. Requesting a post-trade execution report, and then doing some notes on this. Want to select a broker who, so these are the questions that you should think about, or not questions you think about, I guess the factors you should think about regarding when selecting a broker. And yeah, always consider how a broker actually operates before depositing real money and opening live trades. And now we're currently on 3 types of Forex market analysis. So, layout below. 3 types of Forex market analysis. Today's date is 23rd 03 2024. By now you've learned some history about the Forex, how it works, what affects the prices, blah blah blah. Sleep. This is all obviously super important, but know that you're now thinking, boring, show me how to make money already. Okay. Well, say no more friends, because here is where your journey as a Forex trader begins. This is your last chance to turn back. Take the red pill, forget everything, it will take you back to where you were before. You can go back to living your life, this is the red pill dude, or you can take the green pill, which is fully loaded with a dollar extract, and learn how you can make money for yourself in the most active market in the world simply by using a little brain power. Forex Master. Just remember, your education will never stop. Even after you graduated from the School of Pipsology, you must constantly pursue as much knowledge as you can so that you can become a true Forex Master. The learning never ends. Very true. Are you ready to make that commitment? Now pop that green pill in, wash down some delicious chocolate milk, and grab your lunchbox. The School of Pipsology is now in session. 3 types of market analysis. To begin, let's look at the 3 ways on how you would analyze and develop ideas to trade the market. There are 3 types of market analysis: technical analysis, fundamental analysis, and sentiment analysis. So 3 types of market analysis. Technical analysis, fundamental analysis, sentiment analysis. There has always been a constant debate as to which analysis is better, but to tell you the truth, you need to know all 3. So technical, fundamental, sentiment, and market analysis. It's kind of like standing on a 3-legged stool. If one of its legs is weak, the stool will break under the weight and you'll fall flat on your face. The same holds true for trading. Oh wait, since the stool is supposed to represent how a trader goes about thinking and analyzing the market, it's missing a brain. But wait, the stool needs more brains. There technically should be 3 brains to represent the 3 different types of thought process. Ah, there we go. You need to have 3 brains for thinking about the markets. In your analysis on any of the 3, if your analysis on any of the 3 types of analysis is weak and you ignore it, there's a good chance that it will cause you to lose out on your trades. So, need to think about all 3 factors when trading. You lose. Fall over the chair. What is technical analysis? Well, okay, that was a short lesson. So, what is technical analysis? 23/02/2024. Technical analysis is a framework in which traders study price movement. The theory is that a person can look at historical price movements and determine the current trading conditions and potential price movements. A person can look at historical price movement and determine the current trading conditions and potential price movements. Someone who uses technical analysis is called a technical analyst. Traders who use technical analysis are known as technical traders. The main evidence for using technical analysis is that theoretically all current market information is reflected in the price. All current market condition information is reflected in the price. Technical traders generally ascribe to the belief that it's all in the charts. This simply means that all known fundamental information is priced into the current market price. If price reflects all the information that is out there, then price action is all one would really need to make a trade. Technical analysis looks at the rhythm, flow, and trends in price action. Looks at the rhythm, flow, and trends in price action. Now, have you ever heard the old adage, history tends to repeat itself? Well, that's basically what technical analysis is all about. If a certain price held as a major support resistance level in the past, Forex traders will keep an eye out for it and base their trades around that historical price level. Technical analysts look for similar patterns that are formed in the past and will form trade ideas believing that the price could possibly act the same way that it did before. Technical analysis is not so much about prediction as it is about possibility. Technical analysis is a study of historical price action in order to identify patterns and determine possibilities of future direction of price. Is the study of historical price action in order to identify patterns and determine possibilities of the future direction of price. Price had trouble breaking these levels. Charts allow us to see where a market has gone, which gives us a better idea as to where it will go next. So that's the level it's struggling to break, and that's the level it's struggling to break as well. So it keeps bouncing between these two levels, I'm assuming. Technical analysis is a study of historical price action. So how the heck does one study historical price action? In the world of trading, when someone says technical analysis, the first thing that comes to mind is a chart. Technical analysts use charts because they're the easiest way to visualize historical data. Technical analysts live, eat, and breathe charts, which is why they're often called chartists. Chartists believe that price action is the most reliable indicator of future price action. You can look at past data to help you spot trends and patterns, which could help you find some great trading opportunities. Can look at past data to help you spot trends and patterns which helps you find trading opportunities. What's more is that with all the traders who rely on technical analysis out there, these price patterns and indicator signals tend to become self-fulfilling. As more and more forex traders look for certain price levels and chart patterns, the more likely that these patterns will manifest themselves in the markets. You should know though that technical analysis is very subjective. It's very subjective. Just because Michelangelo, Donatello, Leonardo and Raphael are looking at the exact same chart setup or indicators doesn't mean that they will come up with the same idea of where the price may be headed. The important thing is that you understand the concepts under technical analysis so you won't get nosebleeds whenever somebody starts talking about Fibonacci, Bollinger Bands or pivot points. Now we know you're thinking to yourself, geez, these guys are smart, they use crazy words like Fibonacci and Bollinger, I can never learn this stuff. Fibonacci, Bollinger Bands, pivot points, big ass nosebleeds. Don't worry yourself too much. After you're done with the school of Pipsology, you too will be just as smart as us. So, what is fundamental analysis? Whereas technical analysis involves poring over charts to identify patterns or trends, fundamental analysis involves poring over economic data reports and news headlines, and even random tweets from a certain world leader before he was banned. Fundamental analysis is a way of looking at forex market by analysing economic, social and political forces that may affect currency prices. A way of looking at the forex market by analysing economic, social and political forces that may affect currency prices. If you think about it, this makes a whole lot more of sense. Just like in your Economics 101 class, it is supply and demand that determines price. Or in our case, the currency exchange rate. Using supply and demand as an indicator of where price could be headed is easy. The hard part is analysing all the factors that affect supply and demand. In other words, you have to look at different factors to determine whose economy is rocking like a Blackpink song and whose economy sucks. You have to understand the reason why and how certain events like an increase in the unemployment rate affect a country's economy and monetary policy, which ultimately affects the level of demand for its currency. The idea behind this type of analysis is that if a country's current or future economic outlook is good, its currency should strengthen. The better shape a country's economy is, the more foreign businesses and investors will invest in that country. This results in the need to purchase that country's currency to obtain these assets. In a nutshell, this is what fundamental analysis is. So you have to understand the reason why and how certain events like an increase in the unemployment rate affect the country's economy and monetary policy, which ultimately affects the level of demand for its currency. The idea behind this type of analysis is that if a country's currency, so if a country's current or future economic outlook is good, its currency should strengthen. In a nutshell, this is what fundamental analysis is. Higher currency value, good economy; lower currency value, bad economy. So good economy equals higher currency value, bad economy equals lower currency value. For example, let's say that the US dollar has been gaining strength because the US economy is improving. As the economy gets better, raising interest rates may be needed to control growth and inflation. High interest rates make dollar-denominated financial assets more attractive. As the economy gets better, raising interest rates may be needed to control growth and inflation. Growth needs to be controlled. Gets better. Raising interest rates may be needed to control growth and inflation. Wait, as the economy gets better, raising interest rates may be needed to control growth and inflation. Inflation is when things get pricier, because if the economy is better, then people are having more disposable income, right? So if they're having more disposable income, then the prices of stuff is going to get more expensive because that's inflation. And then to control inflation getting out of keeps like rising because people's disposable income keeps rising. The interest rates are risen so that people are more incentivized to put money in the bank to save up instead of spending it because of the raising food prices. Is that how it works? Higher interest rates make dollar-denominated financial assets more attractive. In order to get their hands on these lovely assets, traders and investors have to buy some US dollars first. This increases demand for the currency. As a result, the value of the US dollar will likely increase against other currencies with lesser demand. Since currencies are always paired, their performance is determined relative to that of another currency. I think I should probably write this down. E dot G dot USD gains strength as US economy is growing or improving, not growing. As the economy gets better, raising interest rates may be needed to control growth and inflation. So delete that. High interest rates make dollar-denominated financial assets more attractive. High interest rates make dollar-denominated financial assets more attractive. In order to get their hands on these lovely assets, traders and investors have to buy some US dollars first. This increases demand for the currency. Yep. To get these assets, traders and investors will have to buy USD first. This increases the demand for USD. As a result, the value of the US dollar will likely increase against other currencies with lesser demand. So the value of the USD will likely increase against other currencies with less demand. Since currencies are always paired, their performance is determined relative to that of another currency. Later on in the course you will learn which economic data points tend to drive currency prices and why they do so. You will know who the Fed chairman is and how the retail sales data reflects the economy. You'll be spitting out global interest rates like song lyrics. To be able to use fundamental analysis, it is essential to understand how economic, financial and political news will impact currency exchange rates. To be able to use fundamental analysis, it's essential to understand how economic, financial and political news will impact currency exchange rates. This requires a good understanding of macroeconomics and geopolitics. Requires a good understanding of macroeconomics and geopolitics. No need to be intimidated by such fancy sounding words though. For now, just know that fundamental analysis is a way of analysing the potential moves of a currency through the strength or weakness of that country's economic outlook. It's going to be awesome, we promise. Will his lack of pulse impact my recovery? Europe's economy, US economy. Okay. So next one. What is sentiment analysis? This is one I haven't heard about before, so let's see what this is. Analysis. Sentiment analysis is used to gauge how other traders feel, whether it's about the overall currency market or about a particular currency type. So, sentiment analysis used to gauge how other traders feel, whether it's about the overall currency market or about a particular currency pair. Earlier we said that price action should theoretically reflect all available market information. Unfortunately for us Forex traders, it isn't that simple. The Forex markets do not simply reflect all of the information out there because traders will all just act the same way. Of course, this isn't how things work. Okay, this is why sentiment analysis is important. Each trader has his or her own opinion of why the market is acting the way it does and whether to trade in the same direction as the market or against it. So each trader has his or her own opinion of why the market is acting the way it does and whether to trade in the same direction or against it. The market is just like Facebook. It's a complex network made up of individuals who want to spam your news feeds. Kidding aside, the market basically represents what all traders, you, Warren Buffett or Celine from the donut shop, feel about the markets. Each trader's thoughts and opinions, which are expressed through whatever position they take, help form the overall sentiment of the market regardless of what information out there. The problem is that as retail traders, no matter how strongly you feel about certain trades, you can't move the Forex markets in your favour. So, each trader's thoughts and opinions, which are expressed through the positions they take, help form the overall sentiment of the market regardless of... No, I'm not going to type actually. Regardless of what information is out there, what information is out there. The problem is that as retail traders, no matter how strongly you feel about a certain trade, you can't move the Forex markets in your favour. Even if you truly believe that dollar is going to go up, but everyone else is bearish on it, there's nothing much you can do about it, unless you're one of this GS's, George Soros or Goldman Sachs. As a trader, you have to take all this into consideration. You need to perform a sentiment analysis. It's up to you to gauge how the market's feeling, whether it's bullish or bearish, or risk on or risk off. Then you have to decide how you want to incorporate your perception of market sentiment into your trading strategy. If you choose to simply ignore market sentiment, that's your choice, but hey, we're telling you now, it's your loss. Sentiment analysis is often used as a contrarian indicator. There are a couple of ideas as why this is. What's a contrarian indicator? A person who opposes or rejects popular opinion, especially in stock exchange trading. So going against the trend, basically. There are a couple of ideas why this is. Sentiment is often used as a going against the trend indicator. One idea behind this is if everyone or almost everyone shares the same sentiment, then it's time to go hipster and trade against the popular sentiment. Then it's time to go hipster and trade against the popular sentiment. For example, if everyone and their mamas are bullish Euro USD, then it might be time to go short. Why? Unfortunately, you'll have to go further down the school to find out. It might be time to go short. Another idea is that most retail forex traders unfortunately suck. Depending on where you find statistics, between 70% to 80% of retail traders lose money. So if you know that these unprofitable traders who are usually wrong or currently long Euro USD, well then, true, it might be a good idea to do the opposite of what they do. Being able to gauge the market sentiment, aka sentiment analysis, can be an important tool in your toolbox. Later on in the school, we'll teach you how to analyze market sentiment and use it to your advantage, like Jedi mind tricks. Now, not yet. Market. Oh, this is the bull, this is the bear. Oh, right, so the bear's waiting to come out after the bull's finished. Everyone's keep going for the bull run, but then... right, okay. So, which type of analysis for Forex trading is best? The $1,000,000 question. Throughout your journey as an aspiring trader, you will find strong advocates for each type of analysis. Whereas technical analysis involves poring over charts to identify patterns or trends, fundamental analysis involves poring over economic data reports and news headlines. Hardcore traders in the technical analysis camp scream, Fundamental analysis doesn't matter. FU to FA. It's already embedded in the price, which you can see on the charts. Hardcore traders in the fundamental analysis camp scream, technical analysis is just a bunch of imaginary lines and drawings. Useless fake voodoo magic. TA is BS. While folks in the sentimental analysis camp are observing the two camps fight and monitoring the level sentiments of each other. Fortunately, the different types of market analysis complement each other. Even hardcore technical traders may find useful fundamental nuggets that can help with their technical analysis, and vice versa. In real-world markets, prices are constantly changing and usually develop trends. Those changes in price can and do affect fundamentals. This means that trends in prices affect fundamentals just as fundamentals affect prices. So, trends in prices affect fundamentals just as fundamentals affect prices. And you'll find out in later lessons, identifying trends is a huge part of technical analysis. Do not be fooled by these one-sided extremists. One is not better than the other. They're all just different ways to look at the market. At the end of the day, you should trade based on the type of analysis you are most comfortable and profitable with. To recap, technical analysis is a study of currency price movement on charts, while fundamental analysis takes a look at how a country's economy is doing. Market sentiment analysis determines whether the market is bullish or bearish on the current or future fundamental outlook. Right. Analysis is the study of currency price movement on the charts. Fundamental analysis is the study of a country's economy outlook. Sentiment analysis is the study of determining whether the market is bullish or bearish on the current or future fundamental outlook. Fundamental factors shape sentiment, whilst technical analysis helps us visualize that sentiment and apply a framework to create our trading plans. Fundamental factors shape sentiment. Shape sentiment, while technical analysis helps visualize that sentiment and apply a framework to create trading plans. Those three work hand in hand to help you come up with good Forex trade ideas. All the historical price action and economic figures are there. All you have to do is put on your thinking cap and put those analytic skills to the test. Let me pull out the three-legged stool again, just to emphasize the importance of all three types of analysis. Take out one or two legs of the stool and it's all going to be shaky, right? In order to become a true Forex trader, you will need to know how to effectively use these three types of market analysis. Don't believe us? Let us give you an example of how focusing on only one type of analysis can turn into a disaster. Let's say that you're looking at your charts and you find a good trading opportunity. You get all excited thinking about the money that's going to be raining down from the sky. You say to yourself, man, I've never seen a more perfect trading opportunity in GBP/USD. I love my charts, moi. Now show me the money. I like the emojis that come with this. You then proceed to buy GBP/USD with a big fat smiling face, the kind where all your teeth are showing. You take a selfie of this big grin and post it on Instagram. Then you do a happy dance and post that on TikTok. But wait, all of a sudden the trade makes a 100 pip move in the other direction. Little did you know, but the UK just gave an FU to the EU. Since you look at the charts, you have no clue WTF and EU is, so Google it. You learn that it stands for the European Union, which is an economic and political union involving 28 European countries that allows free trade, which means goods can move between member countries without any checks or extra charges. No clue. OMFG. You now just realise that it's probably serious if the UK wants to do this. The economy could be devastated, lots of people might lose their jobs. Suddenly everyone's sentiment towards Britain's market turns sour and everyone trades in the opposite direction. Your big fat smile turns upside down and you start getting angry at your charts. You throw your computer at the ground and begin to pulverize it. You take a photo of it and tweet it out. You just lost a bunch of money and now your computer's broken into a billion pieces. But your tweet now has a million likes. And it's all because you completely ignored fundamental analysis and sentimental analysis. Note, this was not based on a real story. This did not happen to us. We were never this naive. We were always smart forex traders. From the overused sarcasm, we think you get the picture. Okay, so the story was a little dramatized, but you get the point. Remember how your mother used to tell you as a kid that too much of anything is never good? Well, you might have thought this was just hogwash back then, but in Forex, the same applies when deciding which type of analysis to use. Don't rely on just one. Instead, you must learn to balance the use of all of them. It's only then that you can really get the most out of your trading. Where do we go from here? Now that you're done with the kindergarten and learned a little about each type of analysis, it's time to delve much deeper. Here's what's in store for the next few years of your life. We're kidding, we're talking about the next few school years in the School of Pipsology. Elementary school is a beginner's guide to technical analysis. You'll learn all about the dynamics behind price actions such as support and resistance levels, Japanese candlesticks, and technical indicators like moving averages and MACD. You'll experiment with leading and lagging indicators and discover how to use them in coming up with trading ideas. Sounds pretty exciting, doesn't it? The remaining years of middle school and high school are devoted to studying more technical analysis tools. We'll take a look at the more advanced Forex tools, also such as pivot points, divergences, Heikin, Ashi, Elliott wave theory, and harmonic price patterns. Sounds fancy? It's because they are, but can't wait to get started on those. College are a bit more complicated since you'll be tackling both fundamental and sentimental analysis at the same time. Talk about hitting two birds with one stone. You're the stone and the birds are, well, you get the point. A couple of reasons why we're putting fundamental and market sentiment analysis together. By the time you reach college, you'll be so hooked onto learning more about Forex that one lesson simply won't be enough. It is hard to draw the line between fundamental analysis and market sentiment analysis, but you get there with deliberate practice. As we mentioned earlier, fundamental factors are mostly responsible for shaping market sentiment. Those two types of analysis will take up both freshman and sophomore years of college. Quiz time. 3 types of analysis. In trading, there are 3 main types of analysis: fundamental, technical, and sentimental. Do you know all that you need about them? Test your knowledge by taking this quiz. Start quiz. In Forex, what are the 3 main types of analysis? Fundamental, technical, sentiment. Yep, it's that one. Correct. There are 3 basic types of Forex market analysis: 1 technical, 2 fundamental, 3 sentiment. Which type of analysis looks at historical price movements to determine the current trading conditions and potential price movement? That's that's technical, because you look at the charts. Technical analysis is the framework in which Forex traders study price movement. The theory is that a person can look at the historical price movements to determine the current trading conditions and potential price movements. Which type of analysis looks at economic, social, and political forces that affect the supply and demand of an asset? That's fundamental. Fundamental analysis is the way of looking at Forex market by analysing economic, social and political forces that may affect the supply and demand of an asset. If you wanted to buy the euro because Germany's economy is booming, which type of analysis are you doing? You're doing sentiment, aren't you? Oh no, wait. The idea behind fundamental analysis is that if a country's current or future economic outlook is good, their currency should strengthen. The better shape a country's economy is, the more foreign business and investors will invest in that country. This results in the need to purchase that country's currency to obtain these assets. Oh right, so it's fundamental. When a trader believes that the price will go up, he is feeling, if it's going up, then it's bull. The term bullish is used to describe a person's or group's outlook on an asset as optimistic, e.g. the asset will rise in value. The market reflects all available market information because all traders have access to the same piece of data. False. The market basically represents what all traders view, pip crawler or selling from a donut shop feel about the market. Each trader's thoughts and opinions, which are expressed through whatever position they take, helps form the overall sentiment of the market regardless of what information is out there. Support and resistance levels associated with what type of analysis? That's technical. Have you ever heard of the old adage, history tends to repeat itself? Well, that's basically what technical analysis is all about. If a price level held as a key support or resistance in the past, traders would keep an eye out for it and base their trades around that historical price level. Cool, 6 out of 7. Number 4. Yep. Okay, 3 types of price charts and how to read them. What type of analysis for strain is the best? That section is done. I'm going to leave this episode here. In the next video, we're going to go through 3 types of price charts and how to read them. So, thank you guys for watching, and I'll see you then. Peace.